Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin of Investor Connect. Today we're here with Will Szczerbiak of Greycroft. Will, thank you for joining us.
Thanks for having me.
So we had a previous interview a while back in which you talked about the mobile app space, and glad to have you back today for an update to see how things are going. Can you give us a short update about yourself and what you've been doing since our last interview?
Yeah, sure. I think it's been a couple of years at this point, but yeah, still pushing forward here at Greycroft. We're an early and growth stage venture firm. We do seed to growth investments across internet and mobile. And I think one of the things that we like to do is, one of the things that we appreciate as a venture firm is that the returns in this industry are disproportionately driven by the companies that are able to reach venture scale types of outcomes, the unicorn $1 billion plus types of companies, and really the Ubers and the Facebooks and the ones that really grow to be so large. And what we found is that setting companies up at their very earliest stages with the right syndicate, the right board, and the right group of investors and advisors around the table is one of the best ways to set companies on that path. Things that you do really early as a company, a cultural standpoint, from a syndicate standpoint, have downstream effects on the success of the company. And that's a lot of the reason why we don't have sharp elbows about things like ownership percentage and check size, the board. We just want to get the best group of investors and board members and people around the table to help enable one of those types of outlier outcomes. And we also do we like to be, very helpful to our portfolio companies. So we have a series of relationships with large global types of companies, and we try to bring that network to life for our portfolio companies. Go beyond just an email introduction and really try to put our portfolio companies in a room with those folks. And these are C-level executives from the likes of MasterCard or JP Morgan or Travelers Insurance or Macy's or Disney. And we'll set up, we call them innovation days. We do probably 10 to 15 a year. And we'll have a couple of C-level executives from the representative company. And in advance of the meeting, we'll go through our portfolio with them and try to cherry pick 10 or so companies that are very relevant to the strategic objectives of the big corporate, and have the CEOs or the heads of sales or the appropriate person come give a 15, 20-minute presentation and demo and answer Q&A. And the whole idea, again, being driving business. We want to activate our network, go beyond.
It's all a great program you have going there. Things are going well for you.
Yeah, the idea is to go beyond just what we think of the table stakes for VCs are in terms of being helpful, helping you with, pattern recognition, potentially avoiding mistakes that we've seen other entrepreneurs make at just the board and advisory level, helping introduce new sources of capital. Those are the obvious things, and just generally being a partner to the entrepreneur, supporting the entrepreneur and the team. Going beyond that and really through our events and through our relationships and our network, activating that to really drive business. So those are a couple of the ways that we've tried to be helpful and impactful as investors for our portfolio companies.
Well, great. Well, you've been investing for quite a bit of time now and seeing quite a bit, I imagine, and always like to benefit from the work you've been doing and lessons you've learned. And are there any companies out there that you regret not investing in, and why didn't you invest in them at that particular time?
Oh, yeah, it happens all the time. Unfortunately, in this business, if you don't have, if you had that experience yet, you haven't been in the business long enough yet. But there are several companies all the way back to my days at Volition Capital, my prior firm, that I wish that we had seen and wished we invested in. One that keeps coming back to me has been very successful just because it's in a space that ties in things like logistics and marketplaces, SaaS-enabled marketplaces, which are areas of focus for me that we passed on during my first year at Greycroft. It's a company called ACV Auctions. It's actually based out of Buffalo, New York. And I don't know if you know how used cars move amongst dealers, but they have these wholesale auctions that are managed by these two large companies called Manheim and Odessa. They're physical auctions where the dealers go and actually bid on the cars. This business moved all of that online, and it's really done very well. Bessemer led their Series A and their Series B, and I believe Bain did their Series C, or thereabout, or something. Or Tribeca did their A, Bessemer did their B and C, and Bain did their B. And the company has done incredibly well in that market. And That was one that we saw very early on at the seed stage and had an opportunity to invest in, and we passed. And I think for me, it came down to you're moving cars, right? So there's a heavy logistics component. I didn't know if they were going to be able to scale that. The team was somewhat green. They were first-time entrepreneurs. They did add to the executive team over time. And then the two incumbents also had online offerings and were very well-capitalized big companies that it felt like it was competitive. And similarly with marketplaces, you want the sort of scale of having national or global kinds of network effects. The fact that you're moving cars, the network effects are somewhat confined to pretty localized areas. But we were very wrong, or I was very wrong on all of those points, because they've managed to create a lot of scale and do very well. And I'm not close to the company today, but from the outside looking in, certainly looks like one I'd love to be a part of, and I'm not.
Well, I see a lot of deals like that where there's a hardware component, so to speak. It's not all on software, and there's costs that may come in there. How come the cost did not take this business down, or how do they overcome the fact that you do have to move these big, heavy cars across the country?
Yeah, I'm not all that close to the business right now, but a lot of the cars that transact don't have to move across the country. Most of them move locally. So you can put a network in place where you can draw on a bunch of the carriers, the folks, the companies that actually move the assets without actually owning them, and create sort of another layer to the marketplace where that's brought into the fold, and you can pass a lot of those costs through, obviously, to the dealers. And then you get some of the benefits of that localized scale where you're able to probably drive down pricing with those carriers and the folks that are actually moving the cars, because you're bringing them a lot of business. So I don't know specifically, but I'd imagine it's some combination of that.
Okay. They got very efficient with it in some manner. But just in general, you see a lot of new sectors that are coming up in the marketplace today. Which ones do you find that you're most passionate about, and why?
Yeah, there are a lot of areas where we've spent a lot of time and had success. Fintech is certainly one. I'm very bullish on supply chain and logistics broadly, but specifically, I think there's a lot of ways that technology can be introduced to the trucking industry to build the next generation of brokerages or companies that are helping very large shippers move pallets across the hundreds of thousands of full truckload carriers that you see on the highways. And we're at a company called Emerge that does that. But one that people probably aren't spending a lot of time on or talking about yet, although I think it's going to change very soon, is the renewable energy category. I think you're starting to see with climate change and a lot of the dialogue that's happening about it, I think there's a pretty broad level of acceptance that it's a real thing. And there are a lot of companies now that are building software and services to help sort of enable the transition to more renewable types of energy. And the insight that a lot of people don't realize is you can actually, as a consumer or a homeowner with solar, for instance, you can put a system on your roof, you can finance it, you can pay no money out of pocket, and actually through what's called net metering, where the system actually generates energy and feeds it back into the electrical grid, your utility bill goes away, and you're only basically responsible for the financing charges on the panels. And in most cases across the country now, that fee that you'd pay is less than you would have been paying your utility bill. So for example, let's say you're paying $150 for your utility bill, you install a solar system and you finance it, you'll be paying $100 a month in loan obligation and no utility bill. That's meaningful savings for a large portion of the country. So we have an investment in a company called Palmetto, which is based out of Charleston, South Carolina. And that company is a distribution platform for renewable energy. And right now they're focused on residential solar because of the nature of that problem. They've offloaded and made a bunch of the customer acquisition, the homeowner acquisition costs that have brought down the likes of Solar City, who employed all of their salespeople. They've gone and given software to independent salespeople that are operating their own businesses and given them the ability to sell more effectively, generate proposals, procure financing. And then what Palmetto does is it's almost logistics as a service. Once the salesperson makes a sale, they handle all the fulfillment on the back end. So a lot needs to happen for the panels to get up on the roof. And it includes things like, coordinating with a build partner, coordinating with someone who actually ships the company that actually ships the panels, right? And supplies the raw material. you have permitting and things that you have to deal with the town. They coordinate that all on the back end on behalf of the salesperson, and they split the commission with the salesperson. It's a great model because all the costs are variable. You don't have a big fixed cost structure that sits below it. And you can spin up, and they've spun up a bunch of states at this point. They're growing very quickly throughout the country and doing very, very well. And then the other thing that people don't realize is the growth in this industry is really pretty incredible. The Bureau of Labor Statistics projects that the number one growth occupation over the next 10 years will be a solar installer. So there are all these sort of leading indicators that are, leading me to believe that this is an industry that is really going to change and really is going to yield a lot of really interesting investment opportunities. It's one that people aren't paying a ton of attention to right now. And that's, in my opinion, you can get there early in an industry that's really going to take off that may not be obvious to everyone else. That's the way you play kind of the venture market. That's the best way to play the venture market. If you're there before everybody else and you have that insight. I don't know if I'm right, but I certainly think it's a category that's extremely interesting. And as you know, energy, we are going to transition to being cleaner on the whole. I don't think that's arguable. It's just a question of how much. And energy is one of the biggest, if not the biggest, markets out there. So, there's a lot to like there, a lot to unpack, but that's one that maybe a little off the beaten path that I think is really interesting right now.
Well, that's a good way of minimizing technology risk. The last time venture capital went into renewables was 2010, and the most common referring I heard from that era was the technology didn't prove out. So they had bet heavily on the core technology under solar and wind, and in many cases, it was just ahead of its time. And here you're kind of making more of a play that doesn't require a bet at all on technology improvement. It's just other elements are making it work. So it sounds like a pretty good deal.
Yeah, it's more of a marketplace type of play, to your point. They're not actually operating the installation businesses, or they're not actually manufacturing panels. They're just sort of coordinating. They're sitting as the transaction layer in between all the different parties that need to come to the table to get a system installed. And then there's also a financing component that goes along to it. So that I won't get into too much detail, but I mentioned fintech as being an area of interest. There is a very large fintech component to what they're doing too, because of some of the cash cycles in this business. Everyone gets paid when the panels actually get up on the roof, or the salesperson does at least. But, a lot of work and a lot of things happen in that 60-day period between when the sale is booked and when the panels go up. So cash is being laid out during that period, and it creates a really compelling opportunity for a factoring type of product. The other interesting thing is there's a lot of clean energy, renewable energy products and services that are on the come. And because this company has sort of offloaded customer acquisition to this independent network of people, over time, they'll have access to that homeowner, assuming because they're sort of the face of it after the sale is made, the sort of transaction layer, the person coordinating with the homeowner. They'll be able to broker renewable energy products and services that can generate cost savings to the homeowner in the future. Things like batteries. If there's a new refrigerator out there that's more energy efficient, or HVAC system, they'll be able to kind of get to the core of whether it makes sense for an individual consumer and start brokering that through a marketplace and continue to monetize the consumer down the line. So there's a lot of opportunities in energy, I think. I'm excited about our bet there, but it's one that, to your point, because of what happened in 2008, 2009, 2010, has largely been ignored by the traditional venture market.
Right. It seems like it's ripe for disruption again. But in general, have you avoided investing in any particular sectors today, and why?
We avoided any sectors. Naturally, ad tech is one that in recent years we've shied away from. What happened is a lot of the big platforms, Google, Facebook, Twitter, Amazon, have taken a lot of the quote unquote eyeballs and the attention of people browsing the web. And a lot of the advertising dollars have moved onto those platforms. It's become really hard for the traditional sort of publishing market across the web to generate meaningful business, and that ties into media as well, because the inventory on their sites, the ROI associated with an impression is not great, versus especially when compared to type of ROI that you might get from a Facebook or one of the other platforms. So that's an area we've stayed away from. We haven't done a ton in the blockchain area. I think that's one where we haven't been able to get comfort that where the real business opportunities are going to emerge. I think there are interesting things that you can do when it comes to smart contracts, perhaps some security elements around owning your data, but we haven't found something that is being truly monetized in a great way. The Coinbases of the world are not at their core blockchain companies. They're just sort of riding the wave, so to speak, of cryptocurrencies and the volatility and the action those currencies have gotten from a trading standpoint. But a pure blockchain type of business, we haven't found something yet that has really gotten us excited that it could be a great kind of application that really has the potential to be a company worth several $billion.
Well, that's great. So you've seen a lot of startups. You probably had the highs of the high and the lows of the low. But if you had to pick one best experience you had with a startup, what would it be?
There's a lot of when you work with startups, and I think the entrepreneurs out there appreciate this. There are lots of ups and lots of downs. But it is really, really hard to build a company. What you see in the headlines is not necessarily. There's a lot behind the scenes that went into that splashy, big headline of a fundraise happening and being successful or successful exit. It's really the stuff that what gets me excited is working with entrepreneurs and trying to get through those challenges, helping them solve those challenges, see what's around the corner, and also being there as a partner when things don't necessarily go right, when you're really excited about a group that's about to lead the next round and they drop out, or you lost a customer, you lost one of your biggest customers, or someone really critical to the management team decided to step down. Like that's all the hard legwork that goes into building a company. And, that's the part that I appreciate the most about this business and gives me this sort of profound respect for entrepreneurs that I have. That stuff is really hard, but at the end of it, that's what makes it so rewarding. So I wouldn't say there's one specific thing. It's all of it that goes into Map Anything and Vettery were two successful exits that I had in deals that I led here or co-led with here at Greycroft. And, they were great successful exits, but what made them so rewarding is all of that hard work and all of the ups and downs that along the way that ultimately led us to getting there. And now I'm very close with both entrepreneurs, and with one of them, I'm already starting to work on their next thing. And the other, he's actually co-investing in a couple of the companies that I work with, and we're staying very close. And I'm sure at some point down the line, we'll work together on something else. So it's the relationships that come out of it. I can't really point to any specific thing, but it's kind of being there and helping entrepreneurs through the tough times, being someone to share the good times with, but just generally respecting what entrepreneurs do. And it doesn't always end up in a great success, but when it does, it's that much more rewarding.
Well, that's great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
What else should we cover that we haven't? Well, I'd be curious to get your perspective. We just invested in a company in Austin called Onboarder. They have a modern solution for employee onboarding. We're really excited about it. If anyone has been onboarded into a large corporation, you might have been through the experience of you got to produce a passport, you got to fill out a bunch of forms. Where when you arrive on your first day, you don't know where to get your computer, you don't know who to see. It's traditionally a very mismanaged, very disjointed patchwork type of process. They've brought it all online through modern interfaces, SMS. You'll get notifications about content you need to consume before, what training you need to do, where to go to set up your benefits, where to go on the first day, meet your supervisor, where to get your computer, all that kind of stuff. And the whole idea being that downstream, you can really impact retention. And they have a core engine that could be utilized for a lot more than just onboarding. But onboarding is a real problem. In any event, that company started in Australia. We're really excited about it. They're spinning up. Actually, they're well into building an office out in Austin, and now it's an American company. So beyond that, we invested in Zen Business, also in the Austin area, which is doing a variety of different, offering a variety of different services for small and medium sized businesses. Everything from incorporating and doing the legal work on the front end to payroll to accounting, and kind of being that full business suite for small and medium-sized businesses that might not have the ability to hire a bunch of legal resources or a bunch of accounting resources or HR and payroll people. So we're excited about the community down there. I'd be curious to get your perspective on, and we're actively investing in it, on what's happening and what's got you excited. Kind of flip it on your head a little bit.
Sure. The Austin market continues to grow. It's a great spot. It's very low cost compared to the West Coast, East Coast. Wasn't always a favorite with companies from overseas. Every South by Southwest, I would receive groups from Australia, Belgium, Norway, everywhere from around the world. And most of them ended up settling in the Bay Area because that's where the funding was, or they settled in New York because from Europe, that's the first place you can get to with an air flight. And they didn't go all the way to Austin, but with the cost of business so high on the West Coast, East Coast, we're continuing to see a lot of companies take that extra 3-hour flight into Austin or move all the way over here to gain the benefits that is here. It's attracting a huge number of millennial workers who want to work in the tech industry, so it's not hard to hire. Land prices are still very low cost compared to West Coast, East Coast. Quality of life is still very good, so we just see a lot of attraction from around the world of moving and launching in Austin instead of the Bay Area like they used to, because those be very expensive there as well. So I think I'm really bullish on Austin. I think it's moving from a regional center to more of a national center as far as experience, funding. We have several new VC funds that have opened up in the area. Funding is always a challenge, is not nearly as tough as it was, say, 5 years ago because of the micro VCs that moved into town and the interest from the West Coast and East Coast to invest in an Austin company without having to move to the coast itself. So a lot of good things are coming out of that. And every day we're seeing more companies move here to take advantage of it. So very bullish on it from my point of view.
Yeah, I would agree with that. I think it's become prohibitively expensive in certain markets to build companies. Not to say that there is an extraordinary amount of talent and resources in places like the Bay Area. But Austin, from a quality of life standpoint, I don't think it's quite as cheap anymore as perhaps it was a few years ago. But I think people are starting to take notice. And there's good schools down there. I think from a talent standpoint, we've seen companies find great people, whether it be out of Texas there, UT, and in all different functions, whether it be engineers, sales, marketing, product. There's a lot of good talent to draw on and good quality of life, like you said, good food, and I think it's an attractive place, like you mentioned, especially relatively young people to go and start their careers or even transition during the middle of their careers. So I agree with you.
Well, appreciate you joining us today. How best for listeners to get back in touch with you?
My email is easy, will@greycroft.com.
Well, great.
So feel free to reach out and I will respond to everybody. If it takes me a couple of days, don't hold it against me, but I do make a point.
We'll put those in the show notes and appreciate you taking time today to share your update with us and hope to have you back for a follow-up soon.
Yeah, likewise. Thanks, all. I appreciate the time.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.